Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through and do our daily technical analysis update of commodities, working our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com. I just released a midweek update this morning, so that is posted. And I did make some updates to the Roth 401k that we are following on the website. So we've got May Day coupon that's still active, MAYDAY, 50% off the first month if you want to try it, only for the first month, and a larger discount for anyone who wants to sign up for the yearly membership, including members that are already signed up on the monthly membership. All right, let's dive in here. Let's take a look, see what's going on today. The DXY continuing to head lower, down 0.21%. It does look a little bit overdue for a potential consolidation or something that might come. You can see every once in a while we get these consolidations as it falls. It's that stair-step pattern that we look for. In this case, it'd be a waterfall pattern. This is generally driven by a lowering of interest rates, and it's a currency that's dropping against other currencies. It's a relative strength indicator. So the 2-year yield continues to fall. It does look like we could see further weakness in the 2-year, and that looks well intact for that to occur. I would expect that to continue lower over time. The 10-year also looks good to go lower. We were down 0.26% today. And then the 30-year is holding steady at the current moment, but still looks a little bit top heavy with momentum heading lower. Broken through the support trend line. TYX TNX ratio continuing to move up. This looks absolutely fantastic for gold, silver, platinum, palladium, and the mining companies. When this goes up, it's a tailwind in terms of conditions in the bond market. This is what matters. The stock market doesn't matter. The bond market matters. This is the conditions that are setting up that gold and silver go up in. We've got bond prices flat today on the 20-year, but they have broken the downtrend and look good to continue higher over time. We've got the 2-year and 10-year, and this is uninverting to some degree today. A little bit more of an uninversion day, down about 1%, but still above the key 1-to-1 relationship level. We've got gold slightly lower. Now, I wouldn't have guessed this. Looking at the bond market, the yields coming down on the short end, the 2 and 10 uninverting, and the TYX TNX ratio going higher, I would have guessed gold to be up probably by $10 or more an ounce is what I would have guessed. Silver is up 0.19% and still looks absolutely locked and loaded, ready to rip whenever it decides to take off. We've got platinum up $19 an ounce. I am hoping soon we start to attack this trend line and break out of it. Then we've got palladium up $26 an ounce and still above that support level that is underneath us. And this does look a little bit esque of kind of a shoulder head shoulder deal going on right now. GDX up 0.67%, putting in the bullish engulfing. So we opened a little bit lower today and made our way higher. It looks something like this. And that is called a bullish engulfing. It looks good to continue on up. That also occurred on GDXJ, which looks absolutely on fire here, guys. It looks really good. I like the momentum coming from the downside up and a nice little bullish engulfing today. Looks pretty good. SILJ's got the same type of setup, but is earlier in its launch phase. So GDX already launched, GDXJ is launching, and SILJ is about to launch. There we go. There's the launching pattern. XAU to gold ratio, the gold and silver mining companies outperforming gold by 0.71%, and we are also hopefully in launch mode where this valuation of the gold and silver mining companies starts to outperform gold. We may be slow in the beginning, but I think if we get above this upper white trend line here, that horizontal, and start working our way on up, things will get a lot more fun. We've got crude oil down 1.7% or so. Some people are probably asking why. Why is crude oil down? I thought we had crude oil draws. Got to keep in mind, guys, it's about the macro environment and what yields are doing. Crude oil isn't just about physical demand, it's also about financial positioning and demand. And the financial demand and positioning at the current moment is pretty weak. And it just so happens that the physical demand is pretty strong. So people are anticipating a potential slowdown or recession potentially. And that's what the bond market is trying to grapple with. And maybe they know something that we don't know. Maybe there's some sort of bank problem. Maybe there's some problem in the market that we can't see that they know of. TTF gas down a little bit. Looks like that's getting a little bit of a relaxation pullback there. Natural gas in America slightly lower, but still looks good on a longer term perspective. And we still have good formation for a potential move higher in the short term or sideways. We've got XOP, yeah, you know me, down, well, it's up 0.07%, but we lost a little bit of momentum throughout the day. I don't really like seeing, being next to this in a small little move up with a large selling pressure candlestick. Still looks like we want to go lower, potentially, but I know, yeah, it looks like we want to go lower here. Looking at the weekly candlesticks, this is a bearish engulfing here, and if we close the week out strong, we'll see if that occurs. Could still see some selling pressure. OIH also putting in a pretty bearish looking candlestick, and we could go lower here for sure in OIH. Although the physical demand is strong, this setup does not look bullish. It looks bearish to continue lower. And I full well will take advantage of this pullback if it materializes. Newcastle coal futures down 2%. Looks like we could get a little bit of a pullback here. It looks like the yield curve and the lowering of interest rates and the uninversion is maybe working its way across commodities here. Physical Uranium Trust up 1%. We are holding on by tooth floss. Yeah, tooth floss. Right on support. You could even put a sideways one and say it's already broken. But yeah, we're barely holding on, and this very well could roll over and head lower. People are always, asking the question, well, the fundamentals, they look so good. Rule number one, fundamentals are not the only thing that drive the market. The sector fundamentals matter less than the macro big picture market condition. Tell me a time where commodities were a raging bull market in a recession. That's pretty rare. People get scared. So that is still weighing on all of these sectors in commodities. UX1, which is the uranium futures, getting a little bit of selling pressure here. We could see this dive down in the short term. URA up a little bit, but this still looks like a bearish formation where we might end up doing a full retest. This is an upward facing rising wedge. What we've got here it is, looking at it, kind of an upward facing rising wedge or channel. URNM has the same thing, and so does URNJ. And I know people get frustrated. They get frustrated over this stuff. But there's nothing that you can do. We are just participants in the market, and the market's going to trade the way it wants to trade. Copper up 1%. This actually looks really bullish. That looks good to go up. I'm making my decision off of the A, kind of B. So what you see is you get a big pullback, upward facing pattern, pulls all the way back. Then you get basically a shoulder, head, shoulder pattern that's forming. We also start to see the right-hand side, the big green army show up a small red candlestick. I almost always see that. Copper also, COPX, the miners, also moving on up, looking good. Iron ore slightly lower, and it's right underneath resistance. That does look like it's going to try to break through to the upside. That still looks good. Double bottom here. What I can do here is take this one off, and it's just this easy, guys. You just redraw it, and this A lot of the times this is the slingshot that brings you back and may slingshot higher. We'll see what the demand is over in China first, though. Aluminum up slightly. Got a nice little bounce off this support zone, working our way up. Nickel up 3.86%. Now, this looks pretty good. This looks like something where we could start to build an upward movement. And those that are early, you could start looking for potential investments. Moo also working its way higher. This looks really good. Falling wedge into support, and it's breaking to the upside. So that looks really good for companies in the agribusiness ETF. We've got emerging markets up 0.4%, weaker dollar, weaker yields, and they move higher. This is generally related to currencies and the differences in the currency strength and weakness, and then that dictates money flow. Gary up a little bit today, still holding on. Kind of an ugly looking chart here. We've got TAN up 0.8%. I don't know if I touch solar. Seems like some of these companies cannot make money. And if commodities are going to go up in the future, I don't know how they're ever. I don't know how they're going to make money. So SunPower went out of business just recently. Now Lit's it's looking nice here. So we got all these green. We're up against support. And now we're looking for a move higher. There's your move. So we should be looking at some of these lithium companies for potential entry points. Rare earth metals also moving on up. Maybe there's some investment opportunities here, which is on the website if you guys want to know. For rare earths, the one company I like. Baltic Dry Index right against support, and it is trying to work its way up against the resistance support area. XHB working up. It likes those lower yields. Here it is working its way on up. What does this mean? Well, if the home builders continue to go up, it means that we have a housing shortage, and all of the housing bears are wrong. And how can I make that conclusion? Because the home builders lead all of this. And the stock market is 18 months, 12 months forward looking. So if lower yields do materialize and mortgage rates go down, home builders are going up, and that's what the people are betting on in the market. Russell 2000 working its way on up, looks pretty strong at the moment, right above support. The S&P 500 also working its way on up. I'm kind of in disbelief of how high this is, but you know what? They got to hold it up there because they need to increase their tax revenues somehow. So might as well shoot all of these assets and get capital gains tax from everyone. Why not? And then we've got the NASDAQ also up, much like the S&P, still unbelievable. We've got the SMCI. This is up just a little bit. For the super microcomputer, still looks like dog crap in the beginning here, but it's holding on, surprisingly. Then we've got NVIDIA that continues to work its way on up. They got to push this higher if they're going to bring the NASDAQ and all those other ones higher. You got to push the big dogs. And then Bitcoin's up 3.8%. That looks good to continue higher. Looks like we've got a breakout today, looking pretty good. And Ethereum also looking pretty good. Nice big bullish engulfing today. That looks like it wants to go higher there. There's your pattern there. Big green army that's showing up here. That looks really good to go higher. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Got that Mayday coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.